Hey everyone, welcome back to Corporate Decoder, the place where we decipher the corporate world. Today we are diving into Evans Bancorp's annual report, and let me tell you, there's a bit of a soap opera brewing in the world of mergers, so stay tuned. This report is full of those forward-looking statements, basically management's best guesses about the future. They talk about things like economic conditions, competition, and their ability to integrate new businesses. But remember, it is not a crystal ball, and those guesses are subject to change, so we have to keep in mind that things might not go as planned. The biggest news, Evans is planning to merge with NBT Bancorp in a deal worth around $236 million. It's a big move for them. Shareholders have already voted to approve the merger, and they have secured the regulatory approvals. The deal is expected to close around the second quarter of 2025. But hold on, there are risks involved in a big deal like this. The company says that there could be business uncertainties, contractual restrictions, as well as burden placed on management and internal resources while this merger is pending. There's also a risk that the deal might not even go through or be delayed. That could leave Evans in a tough spot, potentially affecting their stock price and future business plans. Let's talk about risk. Evans is heavily invested in commercial real estate and commercial loans, and at the end of 2024, more than half of its loans outstanding were in commercial real estate. Commercial loans can be more risky than your standard home mortgage because they rely on the success of the borrower's business. What if the business doesn't do well and defaults? The loans are concentrated in Western New York and the Finger Lakes region. If the local economy goes south, Evans could be in trouble. Also, there is the risk that the allowance that the company has put in place for covering credit losses might not be enough. If things go south, they might have to set aside even more money, which would affect their earnings. They rely on deposits to fund their lending. If depositors withdraw their money, there could be a liquidity problem. If people get nervous and pull out their money, the company might not be able to make loans or even pay its bills. What if they had to sell some of their securities to get cash? When interest rates rise, the value of securities portfolios go down. Evans, like other banks, is holding a lot of government bonds and fixed-income securities. If rates keep rising, they may have to sell a big portion of their portfolio. Also, the net interest income depends on the difference between what they earn on loans and what they pay out on deposits. If interest rates start to rise and they have to pay more for deposits to keep up, their profits could get squeezed. Banks are highly regulated, and those regulations are always changing. New rules can affect their lending practices, their capital structure, and even how they pay dividends. Not following those rules could mean fines or restrictions on their business. Banks have to pay for deposit insurance from the FDIC. If the FDIC decides to increase those premiums, it's coming right out of the company's earnings. What about the people who work there? As of the end of 2024, Evans Bancorp employs about 266 people. They say that they value their employees, they try to provide good compensation and a safe and inclusive workplace. But what if they lost some key people? Evans is a relationship-driven business, meaning that personal connections between employees and customers are very important. If a key employee leaves, some customers might follow, and that could affect the business, especially in the insurance business they just sold. On the financial front, let's look at some of the numbers that really matter. The company has about $1.8 million in goodwill tied to a past acquisition. If their stock price tanks or they have other issues, that goodwill could become impaired and they may have to take a hit. Net income in 2024 was $12 million, which is quite a bit lower than the $24.5 million they made in 2023. This decrease in net income was mostly because of a gain that the company had in 2023 related to the sale of an insurance agency. As a result, their net interest margin was 2.81% and 3.02% in 2024 and 2023, respectively. Here's something else to keep an eye on. Regulators might scrutinize their commercial real estate lending activities closely. Of course, cybersecurity is a big deal for any financial company. Evans says that they take it seriously. They are continually assessing threats. It is overseen by the Enterprise Risk Committee of the Board of Directors, which is kept informed by their Chief Information Security Officer. So far, they say that cybersecurity incidents haven't had a major impact, but they're always working to improve their processes, especially with all the third-party services that they use. They may be involved in some lawsuits related to the proposed merger, and the company could have to spend a lot of money defending themselves. This could delay or even prevent the merger from happening. Scroll none/non-numeric. So what does it all mean? Evans Bancorp is in a transition period as it moves towards this merger with NBT. The key numbers weren't great in 2024. While the pending merger brings both opportunities and risks, it's a pivotal moment that could determine the future of the bank. For the year ahead, they will be focusing on consummating the merger effectively and handing over the company. The key risk is the deal falling through. What's my take? Strengths are its strong local presence and historical success, and the main weakness is their dependence on that merger actually happening, and it may distract from their daily business. I think they are likely to be acquired eventually. If you found this helpful, hit like, subscribe for more, and leave your comments below.